On behalf of the Financial Services Commission, I wish to extend a warm welcome to all distinguished guests for your presence today at this awareness session on the regulatory framework for Securiy Token Offerings, in short, STO. Let me start by trying to explain what is a token. And token or tokenization has already become a very buzzword these days. While a token is not a new concept in the IT world, the advancement of technology has made it possible to represent a number of things in a digital format and in a secure way. And this is called basically a token. And the main characteristic of a digital token is the ability to transfer from one person or one party to another without keeping a copy of the token in the originating computer. And this contrasts with, for instance, a file transfer, when we can transfer by email, where we actually are transferring a copy of the document. And therefore, this characteristic of being able to transfer and without being able to keep makes token very suitable for a number of use cases, such as the one we are trying to create awareness on today. So security tokens are securities in digital format and are governed by the Securities Act. STOs represent an alternative way for firms to raise external capital in exchange of the ownership of digital assets. One of my aims upon appointment as Chief Executive is to pursue the development of fintech initiatives of the Commission. Last month, the Financial Services Commission launched the peer-to-peer lending framework. The new framework for STO now comes into this continuum and is set to become another important component of the fintech sector. The purpose of this framework is to position Mauritius IFC as a fintech hub in line with the priorities of the Financial Services Commission. To achieve this objective, the Financial Services Commission undertook the following initiatives. First, on 8 April 2019, the Commission issued a first series of guidance notes on STOs to define and clarify its regulatory stance. This was necessary following queries from industry stakeholders regarding statutory requirements applicable to STOs. Next, in June 2020, the Commission issued a further series of guidance notes to provide for the implementation of a common set of standards for STO and licensing of trading securities systems, and in short TSS, for the trading of security tokens. This led to the issue of a set of 3 FSC rules to allow the TSS to directly solicit investors without the need of an intermediary and to provide for the fees for a TSS license. A video clip will be projected shortly. It will provide for further explanation on the steps for the STO. Distinguished guests, in fact, developments in the digital arena are creating a lot of opportunities for the fintech industry, which in turn is changing the landscape of the financial services sector by making space for new products and service offerings. The use of fintech to raise funds is already a reality. Traditional market players are showing signs to adapt to this new reality. According to a report issued by PwC in 2020, in collaboration with the Crypto Valley of Switzerland, major players such as Daimler, Bank of China, BBVA, and even the government of Austria have raised funds through STOs. The table projected on the screen right now shows a list of established global institutions which have recently conducted STOs. The PwC report also highlights a number of jurisdictions which have taken advantage of STO opportunities. For instance, the USA, Singapore, Hong Kong, and UK are ranked as leading token offering hubs worldwide. Other countries with relatively small-sized domestic financial markets, such as the British Virgin Islands, Cayman Islands, Estonia, and Lithuania, also continue to be attractive locations. Further, in a growing number of IFCs, investment fund structures rely on STO to raise capital, whereby a token will represent an interest in the funds. Distinguished guests, according to the OECD report, the tokenization of assets and potential implications for financial markets, which was issued in January 2020, tokenization of securities, whether equity or debt, is seen by the market as the sector with the most potential for growth. According to yet another report of Deloitte issued in 2019, it is expected that with the spread of securities tokenization across jurisdictions, there will be new actors, new roles, and new services. Traditional players will effectively have the opportunity to meet the new demands of a token-based economy, be it in terms of provision of platforms for storing tokens or acting as service providers. We therefore, as a forward-looking regulator and jurisdiction as a whole, cannot afford not to be part of this evolutionary wave of change towards a digital financial world. Ladies and gentlemen, let me now come back to some of the key elements of our STO guidance notes. The guidance notes provide for the regulatory requirements regarding offering of security tokens, and these include, for example, the types of security tokens in digital formats. These may constitute shares, debentures, securities-based derivatives contracts, or units in a collective investment scheme. The entities allowed to issue security tokens, these will include reporting issuers, expert funds, and professional CIS. The requirements to issue prospectus under the Securities Act where applicable. Any platform offering the facility of trading security tokens will need to hold a TSS license issued under Section 11 of the Securities Act. The custody of security tokens shall be held either with a custodian license under the Financial Services Custodian Services Digital Assets Rules 2019, or a foreign custodian of digital assets regulated in jurisdictions which are signatories of the ISO MMOU. Raising capital through STOs indeed offers many advantages to the industry and stakeholders, namely, first, the concept of digitalization. With the advent of digitalization, investors can trade remotely through new technologies. This allows for 24/7 markets, which eliminates the huge inefficiencies of daily market closures and mitigates the impact of force majeure, such as the one we experienced with the COVID-19 on the securities trading operations. This intermediation, investors in security tokens can access the TSS directly and execute their trade without the requirement of a third party to place orders on their behalf. To this end, the Commission has amended the securities licensing rules and issued the securities solicitation rules in order to allow the TSS to directly solicit investors without the need for an intermediary. Thirdly, liquidity. It is a well-known fact that traditional securities exchanges still take a long time to settle. The STO platform aims at removing these inefficiencies as trades can settle faster. Ladies and gentlemen, the new framework for STOs aims at creating the proper environment to attract issuers, but also to safeguard the interests of investors and reputation of the jurisdiction in line with international standards. All market players involved in the offering and trading of security tokens are required to maintain good market conduct and safeguard market integrity, which is another essential prerequisite for an efficient, transparent, and integrated financial market. The TSS will have the obligation to comply with the requirements of AML-CFT and data protection. The TSS will have to comply with the PIAMNA and its enabling regulations, which are in accordance with the Financial Action Task Force (FATF) recommendations. Moreover, as a prudential regulator, we are deeply conscious that our licensees should establish a robust data security system. The TSS must develop and apply proper safeguards to make sure that its IT and operational systems are fully protected against possible cyber security threats. The TSS should therefore appoint a Chief Technology Officer who will be responsible for establishing, maintaining, and overseeing the internal cyber security architecture. Last but not least, the TSS is required to appoint an external independent third party to undertake IT audits of the system. Ladies and gentlemen, let me now address a few words to our valued industry partners and financial service providers, namely management companies, CIS managers, and investment advisors. As gatekeepers, you have traditionally played an important role in promoting new financial products and services in Mauritius. We have around 1,000 of investment funds which operate in the global business sector, and there are around 65 global business corporations which are reporting issuers. Therefore, there are good prospects for investment funds and reporting issuers to use Mauritius as a platform for raising capital through STOs. I therefore see this opportunity to make a request to you to promote the new STO framework among your local and international portfolio of clients. The Commission is fully aware of the new developments in the financial services sector, and we need to innovate by promoting an appropriate framework to make Mauritius a competitive jurisdiction, as well as safeguarding the interests of investors. On a concluding note, I am indeed pleased to further announce that the Commission is issuing 3 separate consultation papers regarding the introduction of new regulatory frameworks for additional fintech-related activities. These consultation papers are: first, the robotic and artificial intelligence-enabled advisory services; secondly, the fintech service provider; and lastly, the crowdfunding. So I thank you for your attention.
I must say I'm very pleased that today we are organizing our second awareness session in our list of events to sensitize and inform the industry at large on our palette of financial services and products which are being licensed by the Commission. Ladies and gentlemen, I'm aware that day by day financial products are becoming more sophisticated and complex, which undoubtedly require the local authorities to inform and educate consumers in order to facilitate their penetration in the financial market. Our aim for organizing this event today is to provide an insight into the regulatory framework for Securiy Token Offerings, which was launched in July 2020. And I must take this opportunity to congratulate the FSC on reaching this milestone. Our objective today is to ensure that everyone understands how this product can be best used to position Mauritius as a fintech hub. It is worth highlighting that since 2018, the government of Mauritius is making strides to implement its fintech agenda, and 2 years down the road, we have already launched a series of groundbreaking products. I believe that we do not say it enough that Mauritius is the first country to issue the digital custodian license in 2019, and was followed by countries such as Malta and New Zealand, to name but a few. I would like to also highlight that this license was issued after close collaboration with the OECD and international organizations to ensure that whilst we are stepping into an innovation sphere, we are also ensuring that holders of the digital assets license will be mandated to comply with the anti-money laundering and counter-terrorism funding rules in line with international best practices. And on that note, I must say we, at the level of the government, we are fully committed to ensure that these best practices be adhered to. Ladies and gentlemen, from what I gathered from the fintech experts, a Securiy Token Offering, commonly known as STO, is the tokenization and offer to the public of certain rights and or obligations over something tangible. The Chief Executive of the Commission just mentioned, the STO is not a digital currency. A digital currency is not backed by real assets. A STO is an issued security backed by real assets. These are the main difference that we can highlight, if I may say so. So, security tokens have similar characteristics to traditional securities and are thus considered financial instruments subject to existing securities, laws, and regulations. Differently from traditional securities, the ownership is, however, passed using blockchain. They are programmed to act in a certain way without the use of a third party, this rendering their acquiring, transfer, disposal, and corporate actions easier, quicker, safer, and usually cheaper. It can be beneficial to the capital markets by enhancing transparency, mitigating settlement risk, mitigating intermediary risk, improving investors' engagement with businesses in which to invest, developing innovative types of securities to better meet issuers' capital needs and investor risk appetite. Ladies and gentlemen, the European Commission Vice President, Mr. Dombrovskis, stated in his speech delivered at the Eurofi High-Level Seminar 2019, and I quote, "We have to make sure that our financial services sector does not inadvertently hinder this type of useful innovation, and this starts with legal certainty." End of quote. You're all aware that one of the key requirements of international norm setters in the light of Financial Action Task Force or the European Commission is to ensure that there is access to beneficial ownership, and that another benefit is the cyber security and the transparency that is programmed into each and every issued STO share. Your beneficial ownership of an issued security cannot be hacked, lost, or stolen. Rights and obligations on securities can be tokenized, these including the right to participate in a company's profits in case of equity, or to receive a coupon payment or interest in case of debt. Voting and co-determination rights can also be tokenized, and this can result in situations in which, for example, seed investors in an investment vehicle will have an attached voting right as to where the initial pool of investment will be allocated and at which portion. I'm sure that the panelists will provide us with an interesting perspective during the panel discussions, and I'm sure there's no doubt and this is no coincidence, the Commission has launched this framework at the most opportune time. The STO fits perfectly in a period where frontiers are closed, people are relying heavily on digitalization process, and business are finding it difficult to remain afloat. Most of the pillars of our ocean economy are facing a challenging time. The IMF has forecasted a contraction of about 11% for the year 2020 and an inflation rate of about 2.6%. The tourism sector has taken a major blow following the COVID-19 pandemic. Ladies and gentlemen, in our era, there is no sector of the economy which stands in silence. Each sector is interdependent, and by saying so, I believe that such innovative fintech product can foster development and reboost the different sectors such as tourism or manufacturing by enabling foreign investors to invest in a simpler, secure, quick, and transparent manner. Ladies and gentlemen, a survey which was conducted by Score in 2019 concluded that when shopping for a jurisdiction from which to issue the STO, an investor considers 5 factors. First one being a technology-friendly government policy, which requires that governments which harness blockchain, digital assets, and tokenized securities will provide the necessary legislative framework to work on. Secondly, an established financial legislation to regulate securities and experience in the financial and capital markets. Thirdly, a fiscally friendly environment. It is thus important to manage taxation. And fourthly, an approachable and knowledgeable regulator which remains open for further discussions during the licensing process. Given that blockchain is a new area, therefore an approachable regulator which can provide guidance when needed are the ones to look for. And finally, a good reputation, consistency, and quick to adapt to changing needs and technology. This is the reason for which, ladies and gentlemen, my ministry is leaving no stone unturned to meet these above requirements to ensure that Mauritius is a jurisdiction of choice for issue of STOs. I would like to seize this opportunity to inform you that a technical committee has been set under the aegis of my ministry to work on the development of the fintech sector, and very soon we are coming forward with a proposal for a dedicated piece of legislation which will enable the fintech sector to thrive and effectively position Mauritius as the fintech hub of the region. Ladies and gentlemen, I hope that this awareness session today will provide you with sufficient insight into this new product and how best it can be exploited with your clients. I therefore wish you a fruitful session ahead.
The banking and financial industry is fast evolving. The technologies that underpin the fourth industrial revolution are having major impact on businesses. The Financial Services Commission has quickly adapted to this new vision for a better future and is issuing a license for a new product, the Securiy Token Offerings, STO, which is a fintech trend that is picking up momentum in major international financial centers. STO is an upgraded version of digital assets which is subject to security regulation and is a new approach to secure fundraising. The innovation lies in the use of blockchain technology and smart contract programming, which make it a secure, easy, and inexpensive way to raise capital, especially for SMEs. They represent the intersection of digital assets with traditional financial assets, a new technology improving traditional methods. STO is therefore a form of investment representing tradable financial assets. In Mauritius, there are 3 types of security tokens: equity tokens, debt tokens, and asset-backed tokens. Any person wishing to operate a platform for the trading of security tokens in Mauritius will have to apply for a Trading Security Systems (TSS) license with the Financial Services Commission and shall comply with strict legal requirements including AML-CFT obligations. These strict regulations reduce scams. In Mauritius, the following entities may be allowed to issue security tokens: collective investment schemes, authorized as expert funds or professional collective investment schemes, PCIS, targeting inter alia sophisticated investors and expert investors who make an initial investment of no less than $100,000, and entities registered as reporting issuers under the Securities Act, including issuers listed on a securities exchange in Mauritius or having less than 100 shareholders. STO bring a number of improvements to traditional financial products. In compliance with laws and regulations, they substitute financial institutions and intermediaries. This has major benefits like lower fees, faster deal execution, free market exposure, larger potential investor base, automated service functions, lack of financial institution interference. While cryptocurrencies are programmable money, security tokens are programmable ownership. Ownership of an STO acknowledges legal ownership of a digital asset, and the value of that STO is tied up with the value of the company selling it. STO is becoming more popular with companies and investors because of its transparency, accountability, efficiency, and risk reduction. It is backed by real-life assets which make its valuation easily accessible, and the use of fewer intermediaries reduces the transaction costs significantly. With STO, asset owners can market their deals to anyone with an internet connection within regulatory limits for a fraction of the traditional cost. STO offer fractional ownership, which opens up the market to small investors, offering them the opportunity to invest in large and international conglomerates and benefit from their potentially significant increase in value. Security Token Offerings will revolutionize traditional finance. It enables investors to use their money effectively and contribute to bring changes globally.